Hello champs, hope you all are doing amazing. So in this video, let's begin revising another important chapter from the exam point of view, chapter 11, company accounts. This particular chapter has totally 6 units covering unit 1 of theory content, which gives you a strong concept with respect to the structure of company and other few aspects where you can also observe the format of balance sheet and profit and loss. So with respect to theoretical part, you will definitely study the same thing in your law paper as well. So just focus on those points. So we will start with unit number 2, issue, forfeiture and reissue of shares. From the exam point of view, with respect to company accounts, all total 6 units including, you can expect minimum 20 to 25 marks of questions appearing in the exam. At least you can see up to 20 marks, guys. So the concepts, first of all, holds a strength to proceed with this particular units one by one. So as we do in the previous chapters or units, we will first focus on getting the conceptual clarity and then invest all that to solve the most important questions which requires one-time revision at least before you face your exam, guys. So let's begin the session. Initially, you can just find few theoretical part. First, share capital, normal. This is nothing but the total capital of the company, which is divided into number of small indivisible units of a fixed amount, and each such unit is called a share. This is simple thing which we have been understanding since we learned the basics of accounts. This fixed value of share is printed on the share certificate. That is what exactly and how it would be presented is called nominal, par or face value of a share. So these three indirectly means the same thing, either nominal value, par value or face value of share. That is what is the worth of one particular unit of a share. However, a company can issue shares at price different from the face value of a share. So there are two things, guys. One side there is nominal, par or face value. On the other side there is issue price. The company can decide its issue price. We will understand these points later. The liability of a holder of share, who is called as the shareholder, is limited. To what extent? Only to the issue price of shares acquired by them. So here they are not talking about the face value or nominal value. They are restricting the limited liability of the shareholder towards the issue price. So the liability will only be limited to this extent and nothing beyond the issue price. Share capital of a company is divided into following categories. So let's understand what are the categories for share capital. First one, authorized share capital or nominal share capital. So this is nothing but the maximum capital a company expects over the lifetime of its business. So it is nothing but maximum capital requirements. This amount of capital will be mentioned in the capital clause in memorandum of association, and this memorandum of association will be registered with the registrar of companies. So in short, authorized capital is nothing but the maximum capital of a company. Done. Next, issued share capital. Now, all of the types of capital which we are going to understand, there is a chain effect which we can observe. So, you will understand this one by one as and when we discuss. Issued share capital. Now, what does issued share capital means? Nothing but share capital which is issued to the general public. So company need not issue total authorized capital. So it is logical that at one shot itself the company need not issue the total authorized capital. They can only issue what is required for that particular business activity for what they are expecting currently. Whatever portion of the share capital is issued is called as issued capital. The remaining portion, see now, to authorized capital is nothing but the total maximum capital. Issued capital is a part of authorized capital. So apart from what is remaining in the authorized capital, that is unissued capital, it is not shown in the balance sheet. If I have to present all these details in my balance sheet, this unissued part will not be shown. However, under authorized category, maximum capital would have been written. So for a user to understand what is the capital structure, he can observe authorized capital. Out of total authorized capital, how much is issued capital? Done. Next, subscribe to share capital. See, from the company's point of view, how much is issued to the general public is called issued capital. Now, subscribed share capital is nothing but how many shareholders have shown the interest in subscribing for the shares issued by the company. So it is that part of the issued capital. So basically it is nothing but part of issued share capital which is subscribed by the public. So subscription means it is applied by the public and also allotted by the company. Both the activities are important. Only if the public subscribes, it doesn't end there. The company also has to complete with allotment. It is also including the face value of shares issued by the company for consideration other than cash. So when it comes to issue, there are two variants. One is for issue of shares for cash and the other is for issue of shares for consideration other than cash. So we will discuss that concept in a while. Here what they are telling is with respect to subscribed capital, it also includes the element of issue of shares issued for consideration other than cash. Yes. Next, called up share capital. Now, what does called up share capital here mean? See, I told you in the beginning, so it goes with the link. Issued share capital is nothing but part of authorized capital. Now, subscribed share capital is also part of issued capital. Observe what called up pays. Companies generally receive the issue price of shares in installments. Now, what does this mean? For example, if a company determines to issue shares at par value, assume for one share, they are denominating the value at rupees 10. So this 10 rupees, the company has an option either to issue at lump sum or in installments. So when the company opts to receive this amount in installments, then they will break up this 10 rupees in different set of period to receive money from the shareholder. So this how much of they call is called as called up capital. You will understand that installments in a while. Now let's focus on called up capital. The portion of the issue price of share which a company has demanded or called from shareholders is known as called up capital. And the balance which a company has decided to demand in future, that is when it doesn't know. So they are just focusing on how much is required for the current scenario. So for that purpose, they have called some amount in the total face value. So remaining will be referred to as uncalled capital. Clear with this? Yes. Next, paid up share capital. So commonly you would have observed these wordings, paid up share capital. Called up is again from the company's point of view. How much the company is calling with respect to its installments. Now, paid up share capital here is nothing but portion of called up capital which is paid by the shareholders. So this is from the shareholders' point of view. It doesn't matter how much the company has called up. So from the shareholder point of view, how much of the installment is he paying? So that part will be considered as paid up capital. Installments in arrears means the amount not paid although it has been demanded by the company as payments towards the issue price of share. So what does this mean is when the company makes a call that is to receive the next installment, it depends purely on the shareholder. Now, from the company's point of view, if they have to record the total requirement of capital, the company will definitely show it at the called up value and the balance which is not paid will be made as an arrear, that is receivable in nature. Yes. To calculate paid up capital, how do we calculate? The amount of calls in arrears is deducted from called up capital because here we are finding up paid up, not called up, paid up capital. So call in advance is that portion which is yet to be called but has already been paid by the shareholder. There are two wordings which we observe, calls in arrears and calls in advance. We will discuss this in some point of time. But for now, calls in arrears is nothing but company has made the call, shareholders hasn't paid it. Calls in advances before making the call by the company, the shareholder has already paid it. So in balance sheet, called up and paid up are shown together. How? Called up capital is nothing but paid up capital, that is total paid by shareholders. To that I will add calls in arrears because company has made the call which is part of called up capital. Therefore I am adding. And minus calls in advance is any. Company has not yet called but the shareholder has paid it. If the company has not yet called, it cannot become part of called up capital. So therefore I am subtracting here. Clear? Further. Reserve share capital. So this reserve share capital is nothing but part of the share capital which is set aside as a reserve by the company. What does it say? See, as per section 65, a company may decide by passing a resolution that a certain portion of its subscribed uncalled capital. So understand it clearly. It should be a subscribed part of share capital and it is uncalled because the company is reserving this for a particular part. Yes, and shall not be called up except in the event of winding up of the company. So this is nothing but reserve share capital which will be considered by the company only at the time of winding up. Portion of the uncalled capital which a company has decided to call only in case of liquidation, that is means that is the situation when the company is getting closed down, it's called as reserve capital. So therefore, as the name itself says, there is a purpose for what this reserve is maintained. This is part of subscribed uncalled capital which will be called up by the company only at the event of liquidation of a company. So these were the categories of capital. I hope you got a proper idea about each one of them. Now, the shares, as I mentioned, can be issued by company either for cash or for consideration other than cash. So first part we will understand what is the accounting treatment if the shares are issued for cash. So first, the issue of shares is generally received by the company. As I mentioned earlier, either the company can receive in lump sum or in installments. And if they are received in installments, how, in what form it would be received? So first installment will be taken as application money. So basically this is nothing but the interest shown by the shareholder by subscribing, providing the application money. Second installment is the confirmation by the company that I will allot you with respect to the number of shares subscribed. So at that point of time, the company will receive allotment money. So this safeguards the confirmation that shareholder is going to get for whatever number he had applied for. Further, there could be different installments, that is first call money, second call money and so on, and last final call money. It depends on the company how many calls they have to make. Some companies can make just first call and restrict it to second and final call as well. Yes. So let's understand what is the journal entries for issue of shares for cash. Now understand properly. So this, as we observed in installments, we will understand the journal entry in installments. If see if it is the lump sum, the game is simple. You will just pass one entry because you have received the entire face value in one particular installment. So at that point of time, I will directly credit the amount to share capital. Understand this is with respect to raising capital. So capital account by default will have a credit balance. So if I have to increase, I will have to credit. So if it was in lump sum, one single entry, bank account debit to share capital account. If it is equity share capital. If it is preference share capital. So this was simpler if the issue of shares for cash was in one lump sum payment. Now here what we are going to understand if it is done in installments. With respect to questions also, you will observe these available in installments as well. Okay, as we saw the table above, your face value will be divided into different installments. For now, I'm just using the face value, but we will just observe issue price is also having a major impact. Okay, first, on receipt of the application money. This is the first step where the shareholder should prescribe his interest by paying the application money. You are recording the journal entries from the company's point of view. So when you receive the money, what will be the entry? Bank account debit because I'm receiving the money. To share application account. So this is with respect to what aspect? So I'm crediting it. So share application account. Now this share application account is a nothing but part of installments for the amount included which should be transferred to share capital. So then the subsequent entry would be transfer this to share capital. So share capital account debit to share application account debit to share capital account. So this is nothing but amount transferred to share capital. This was the first installment which will have two entries. Second, on allotment of shares, that is the company is now allotting the shares. First of all, you will make it due from the receipt of shareholder. So what is the entry? Share allotment account debit to share capital. Now understand the logic here. Why are we debiting share allotment? So from the company's point of view, it is as good as in the nature of a receivable. So any receivables we will debit. Ultimately, this amount should go where this is belonging to share capital. So we are first making it due. So what is the due entry? Share allotment account debit to share capital. Further, when the company has made it due, the next step is to receive that allotment money. So when the company receives, the entry would be bank account debit with respect to what? Share allotment account. Now understand the system here. Share allotment on one entry you debit because you're showing it as a receivable. Now that receivable is now received. So you have to cancel it out. So once debit, here it is credited. Ultimately, the entry will be bank account debit to share capital. The impact, what I am trying to connect here, which was nothing but one single entry, what we understood if it was for lump sum. Done? Yes. Next, on call being made. It depends on what call the company is making. Same like share allotment structure, we will first make it due. So what is the due entry? Share call account debit to share capital. So ultimately this amount should be transferred to capital. That's why we are crediting capital. The next step would be receipt of call money. So share call, again the same logic because it is my receivable, so I am debiting. So when I receive, I will credit it. So the next entry will be bank account debit to share call account. So these were the simple entries when shares is issued for cash, if it is done in installments. The next step comes with respect to subscription. Depending upon this, the journal entries will definitely have an impact. So whenever a company decides to issue shares to public, it invites applications for subscription by issuing a prospectus. That is, prospectus nothing but an informatory document given to the general public, which acts as an explanatory note with respect to what is the nature of business, operations of a company, and all details with respect to issue of shares. So if a shareholder is interested, he will revert back by subscribing to the number of applications mentioned in the prospectus. So in reality, if you want to understand, the prospectus will determine a fixed quantity. So that is nothing but based on which the company goes on with allotment structure. It is not necessary that a company receives applications for the number of shares to be issued by it. That is, it is not necessary. The company should receive all the applications to be issued by it. So this is a case of under subscription. So we will understand this procedure for raising funds through equity. So first step to be done by the companies, issue prospectus inviting applications for shares from the public. Next, full subscription is a situation where whatever you called up for, whatever is your requirement, that is applications is received for all issued shares. You would have fixed something to be issued share capital. With respect to raising that issued share capital, we will make the issue with respect to applications. If the full subscription is made by the public, that is called as the situation of full subscription. Second is under subscription. This is nothing but applications received are less than shares issued. So you would have issued such quantity of number of shares, but as per your issue, the applications received is short. So this is a situation of under subscription. So under subscription, there is one point to take care with respect to minimum subscription, a very important requirement as per law. What does minimum subscription determine is if a company is willing to raise its share capital with respect to the issued capital, minimum 90% of the total issue should be subscribed by the public. So this is nothing but minimum subscription. Only if minimum subscription is met, the law allows the company to further go and allot the shares. So when it is a situation of under subscription, the first requirement is to be checked whether 90% point is met or not. So in this case, minimum subscription if received, so directors will make allotment of shares applied for. What if minimum subscription is not received? Then the company cannot go ahead with respect to issue. All application money must be returned. Understand it systematically. See, we do not know whether the company would meet minimum subscription until and unless we get a data of number of applications received. So anyway, you would have already passed the entry for application money received, and that transfer to share capital. Now, if the minimum subscription is not met, the process will only not be relevant. So, therefore, what it says, all application money must be returned back. So, with respect to the installments which received, application money would be present in the business. So, since the share issue is no longer going to be relevant, we will have to return it back. Next, last case is oversubscription. This is a situation where your applications received are more than the shares issued for. So there can be three possibilities. Either there could be full subscription, under subscription, or over subscription. In this case, directors can choose the route of pro rata. So there are two ways. First, directors can outrightly reject the application, that is whatever extra received, or they can go with some arrangement called as pro rata allotment. This is nothing but made by directors. Allotment money would be received once you proceed with allotment, and further calls and call money will be received as we saw the installment structure. So this chart just gives you an overview what could be the situation of subscription, and when it comes to under subscription, do not forget the point of minimum subscription. This is most relevant in reality. Yes, shares. Now, issue of shares. We are going step by step, guys. So, we understood the situation of what could be the subscription state. The next point comes with respect to issue price of shares. First category, shares issued at discount. See, as per Companies Act 2013, which is prescribed in section number 53, there is a clear prohibition that no shares can be issued at discount. See, what does it say? A company cannot issue shares at a discount except in the case of issue of sweat equity shares, because this is another category of share which would be given at discount only for the management or employees inside the company as a reward to their work. So exception is there as per this particular situation. Normally, issue of shares at discount is not available. That is what you have to know here. Thus, any issue of shares at discount shall be void. Void means it will not be relevant at all. Next, shares issued at premium. Now, this what we are going to discuss is with respect to issue price. Understand one thing, on one side there is a face value, which is nothing but the base price of a share. Now, shares can be either issued at par or at premium because discount is anyway prohibited. We are going to understand shares issued at premium. When a company issues its securities at a price more than the face value, it is said to be an issue at a premium because we are getting extra amount. Premium is the excess of issue price over face value of the security. So what is the accounting treatment with respect to securities premium? When shares are issued at a premium, the premium amount is credited to a separate account which is called as securities premium account because it is not part of share capital. See, whatever amount will be credited to share capital, understand one thing clearly, will be denominated at face value because ultimately that should fall in place with respect to your issued capital called up or paid up. So therefore, we will record the share capital with nominal or face value. Now what happened in this case? We are receiving something extra. So that extra amount is nothing but towards securities premium. So in order to not disturb the nominal value of shares, we have a separate account which is called as securities premium, and this is not part of share capital. Next, this will have a credit balance. So securities premium account will be shown under the heading reserves and surplus. This is as good as your reserve. You have received something extra. We will utilize it for a very specific purpose. The purpose of utilizing the balance in securities premium is also mentioned as per Companies Act. So we will make use of such balance only for those purposes itself. However, reserves and surplus is shown as shareholders fund in the balance sheet as per schedule 3. So what does it say is whatever we record or present in the balance sheet with respect to equity, there is a category called as shareholders fund. Ultimately, reserves will also belong to shareholders. So therefore, here they tell it is nothing but part of shareholders fund. Next, when shares are issued at a premium, what is the entry we will have to observe? See, premium can be collected either with application money, allotment money, or call money. So we will have to first understand what point of time the premium is associated with. If the premium amount is collected with application money, same entries what we understood, here just you have to observe with respect to securities premium. So when we receive application money, what is the normal entry? Bank account debit to share application. Now here premium is collected along with application money. So the amount will be total application money plus premium amount. Next, now this whatever we collected, we understood it is not part of share capital, so we will have to bifurcate. What was the next entry we were generally passing? Share application account debit to share capital. Now in this application there is premium involved. So we will bring now a separate account called as securities premium account. So what will be the entry? Share application account debit to with respect to whatever total amount we have received to securities premium account. Number of shares into the premium amount per share and then to share capital at face value of share. So number of shares allotted into nominal value per share. I hope the points are easy for you to grasp. Next, premium amount is collected or called with allotment money. So in the process of allotment, I will have to first make it due. So when I make it due, what is the entry? Share allotment account debit to share capital. So with respect to this here, I will also include premium amount. Here there is still no bifurcation. Understand, first I am making it due. Next will be when I receive the amount. So what will be the entry there? Bank account debit to share allotment account. So this money received will be including premium consequent upon allotment. So on top, first we will have to make it due. So understand, this will not go to share capital. So since I will have to credit this to share capital, what is the entry? Share allotment account debit to share capital, then to securities premium. So this goes with respect to allotment amount, that is with face value, and this with the premium amount. Next would be receipt. So that is nothing but bank account debit to share allotment. Here will also include the premium amount. Clear with this? Yes. So this was with respect to issue of shares. If it is at par, what if it is at premium? We understood. Next concept, calls in arrears and calls in advance. So first of all, what is this? Calls in arrears. The company has made a call, that is to receive further installments, but the shareholder has not paid it. With respect to company's point of view, when the company is making a call, it is making with an expectation to receive or raise that much amount of capital. Now, when the shareholder doesn't pay this, it will be in the nature of a receivable to the company. So how will this be recorded? See, sometimes shareholder fail to pay the amount due on allotment or calls. So it depends purely on shareholder, because application he cannot do that, since that is nothing but a confirmation to just communicate that they are interested. Yes, the total unpaid amount on one or more installment is known as calls in arrears or unpaid calls. This is nothing but unpaid amount which is outstanding. Such amount represents the uncollected amount of capital from the shareholders. Hence, it is shown by way of a deduction from called up capital or to arrive at paid up value of the share capital. Again, it is very logical because called up represents how much of the capital is called up by the company. So this calls in arrears, if I have to impact the capital figure, I will have to subtract, I will have to consider this by way of a deduction from called up capital. Yes. So what is the entry for this? Understand one thing, calls in arrears is nothing but a receivable. So all receivables we will debit. So first I'm making it due. Calls in arrears account debit. In this process, if I receive any amount, bank account will be debited. See, calls in arrears will come only when first you would have made a due entry. That is, assume there is a call, first call made, equity share first call account debit to equity share capital. You would have already passed this due entry. This you will know only when the time comes for payment. That is how much of the shareholder will not be able to meet the deadline. So when the payment is received, assume partially shareholders would pay. So for that bank account debit, some of the shareholders wouldn't pay. So that will be in the nature of receivable. So I will debit calls in arrears account. 2. If the call is due with respect to allotment, allotment will come. If it is with respect to call, calls will come. So either of this can come depending upon where the call is made and where the arrears is being reflected. That next, calls in advance. So as the name itself says, before even the company goes ahead making the call, the shareholder voluntarily pays the installment. So some shareholders may sometimes pay a part or whole of the amount not yet called up. Such amount is known as calls in advance. This amount is credited in calls in advance account. So understand logically, calls in arrears was in the nature of receivable. Calls in advance, understand what is it prescribing or what is it indicating. You have not yet made it due. Yes or no, first you have to make it due and then receive the money. You have not yet made it due. So it is as good as income received in advance. Yes. So this will be in the nature of a liability. Therefore, we will have to credit it. When you receive, the entry would be bank account debit to calls in advance account. So when calls become actually due, first you will make it due. So at that point of time, calls in advance is adjusted at the time of the call. When you make it due, there will no be any impact with respect to calls in advance. So understand there is call with respect to final amount made. So what is the due entry? Equity share final call account debit to equity share capital. So next would be to collect the amount. First of all, with respect to this, I've already received some advance. So what will be the entry? I will have to cancel. Earlier you would have credited calls in advance. So now bank account debit for whatever you receive, calls in advance account will be debited because earlier you had already shown it as the amount received to particular call account. I hope you are understanding the journal entry systematically. So far, all good. Yes, further. So this is just an overview to prescribe calls in arrears and advance. See, at the time of receiving the value of shares in installments means calls. Share calls money is received in full. Bank account is debited with full money received. So nothing is outstanding. So therefore, bank account will be debited. Calls in arrears, that is money received is less than due. So calls in arrears account will be debited. Calls in advance, money of future is received beforehand while you actually collect the money. This will be calls in advance credited because it is as good as income received in advance. Next, interest on calls in arrears and calls in advance. Again, another important topic. So carefully understand, guys. You had made a call, so that was with respect to due. When the time of payment came, some of the shareholders didn't pay. This is calls in arrears. Some of the shareholders paid well before the installment time arrived. So that is calls in advance. Now think from the company's point of view. The company either getting the money delayed or the company has already got the earlier payment. So here comes again the concept of time value of money where the shareholder will also be having that interest attached. So therefore we will understand the concept of interest on calls in arrears and calls in advance. So calls in arrears is first of all what your receivable. So if you have not yet received, because of the timeline where the shareholder is delaying for that particular period, I will have to receive the interest. See, it is payable. This is important. It is payable by shareholders to company on the calls due but remaining unpaid. Whereas calls in advance, it is payable by the company to shareholders. Both are payable. But calls in arrears is payable by the shareholders, whereas advance is payable by the company to shareholders. So as per table F, what is this? So this is as per the Companies Act with respect to maintenance of articles of association. As per table F, maximum prescribed rate is 10%. So majority of the times, the rate of interest for you will not be available in the question. So it becomes important for you to remember these rates. For interest on calls in arrears, it is 10%. For calls in advance, it is 12%. So remember this, while the company is receiving, it will receive at 10%. When the company is paying, that is interest on calls in advance, it will pay at 12%. So this is the requirement here. Period considered. So from the date call money was due to the date money is finally received. This is the period where we calculate interest. Whereas for interest on calls in advance, from the date money was received to the day call was finally made due. So this is with respect to applying the concept of interest. What is the journal entry? The journal entries for interest on calls in arrears is first making it due. For interest receivable on calls and arrears, it is your income. So first we are making it due. Who should pay? Shareholder. So shareholder account debit to interest on calls and arrears account. So this is first making it due. Next, while we actually receive this. So while we receive, what is the entry? Bank account debit to shareholders account. Interest on calls and arrears is a nominal account. So it will be transferred to profit and loss. Who should pay you? Shareholder. So the entry will be bank account debit to shareholder. Easy? Yes. Likewise, interest on calls in advance. First, making interest due. Interest on calls in advance is your expense. You have to pay. So, expense will be debited. Interest on calls in account, advance account debit to shareholder. When the time period actually comes, payment of interest, should we pay? To the shareholder. So, shareholders account debit to bank. I hope these concepts are crystal clear to all of you. Next. The case of oversubscription, a very important concept from the exam point of view, where you understand pro rata. See, if an issue is oversubscribed, while I was discussing oversubscription, I had already mentioned that there could be two situations. Either the company can outrightly reject, or second area would be they will consider with pro rata allotment. See, first, some applications may be rejected and application money refunded in respect of others. Only a part of the shares applied for may be allotted, and the excess amount received can be utilized towards allotment or call money which is fallen due or will fall due for payment. See, both situations are given. One would be with respect to rejection, another would be proportionately applying. So, sorry, proportionately allotting. So, this concept is called as pro rata allotment, wherein the company makes the allotment on proportionate basis. What does it mean? So, first we'll understand the entry for rejection. See, on refund of application money to whom the shares have not been allotted since there is a situation of oversubscription. As a company can allot only for number of applications issued. So anything extra received with respect to application money will be given back. So what will the entry be for that? Share application account debit to bank account. This is for the money refund. Second case, when only a part of shares applied for is allotted. See, pro rata allotment means what is? Instead of allotting the number of shares the shareholder is applied, he will not be definitely getting the full of applied number since the company is decided on making a pro rata allotment. So what am I trying to tell is, assume for example, as per the prospectus details given, the number of shares which need to be minimum applied by shareholder is 10 as one batch. But with respect to pro rata allotment, instead of allotting 10, the company might allot 8. So this reduction from 10 to 8, wherein you save on 2 shares, which can accumulate together to allot for other shareholders who has shown interest by providing extra or excess application. If this is a situation, what company prescribes here is, so instead of refunding the application money, we will allot the shares. That is why pro rata allotment is happening. So when they allot the shares, the installment money received will have to be definitely presented in the format whatever we have discussed. So what it says here is, if you have received the excess applications for which you would have also received the excess application money, so that will be further transferred to subsequent installments, that is either allotment or call. How is the entry reflected? So share application account debit. See, first let's understand the structure. While you receive the application money, bank account debit to share application. The next entry was share application to share capital with respect to the application money received. Now, when I made the first entry, bank account debit to share application, understand one thing. I have received excess application. Assume my requirement was 1 lakh, but I have received with respect to number of applications is 1 lakh 50,000. 50,000 extra received. Now, when I record the entry bank account to share application, I would have recorded it for 1 lakh 50,000 applications, correct? But actually, how much of the amount should go to share capital? 1 lakh only, because that is what is issued. Now there is application money credited with 50,000 extra application. Now this, when the company decides for pro rata allotment, they will transfer this to allotment or call. So that is what is happening here. Share application account debit I'm further transferring it to share allotment with the application money accepted for allotment. In this course, if there are any calls in advance received, I will credit that. In this connection also, the company can partially reject, that is refund some of the application. So then the entry would be share application to back, whatever we saw on top. Pro rata, this is the entry, simple entry. You will understand this more detail while we solve the questions. Please make sure that this topic is not at all complicated, guys. Pro rata, if you are just randomly reading, you will definitely not get it. So understand with this structure what we got it with respect to allotment when there is over subscription by the company. This is credited to share capital subsequently. This type of share allotment is termed as pro rata allotment. Further, next important concept is forfeiture of shares. Now, what does this forfeiture mean? It is nothing but cancellation. Why would the company cancel? See, first of all, when the company is making installments, the company is not receiving any amount that will be routed as calls in arrears. The next situation comes where the company has waited beyond the specified time period, or the company feels that there is no point of waiting when the call money is already mailed due. So at that point of time, the company takes a step to cancel the shares. So with respect to that, what is the objective we are considering is on one side, the company raised capital to require that additional money. Since after repeated reminders, the company is not able to get that money, means it is better to cancel that. And if the company still needs money, it can go for further reissue. So that is the objective behind this. See, it is very common that one or more shareholders fail to pay their allotment and or calls on the due dates. So application is nothing but interest, so that will not be disturbed. Next installments, it depends. Failure to pay call money results in forfeiture of shares. That is, cancellation is the action taken by company to cancel the shares. When shares are forfeited, the title of such shareholder, that is, who will be standing as the owner for that particular number of shares, is extinguished. That means it will be taken away. But the amount paid to date is not refunded to him. Till date, you would have at least paid application money. So first of all, understand from the company's point of view, the company is not completely rejecting, as we saw with respect to oversubscription. This is a case because the company has tried from its end, unable to receive the due amount. So therefore, the company will not refund whatever amount is received from shareholder. The shareholder then has no further claim on the company. The shareholder also cannot put forward with respect to receipt of such money which is paid to the company. The power of forfeiture must be exercised strictly having regard to the rules and regulations provided in the articles, and it should be bona fide. That means it should be genuine in the interest of the company. So what is the accounting entries? While passing the accounting entries, these 3 points should be carefully observed. See, amount called up. How much was the amount actually called up by the company? That is amount credited to capital in respect of forfeited shares. Amount already received in respect of those shares. In the total outstanding amount, how much is actually received? Later, amount due but has not been received in respect of those shares. Because of this only, the activity of forfeiture is happening. So what is the accounting entry? So forfeiture of shares which were issued at par. Issued at par means what was the initial time of issue? This was issued at face value. So you're cancelling the shares. Understand it logically. When you're cancelling the shares, whatever amount is being taken to share capital will no longer be relevant. So therefore, the entry will be share capital account debit. So you're reversing with respect to this. 2. With respect to what installment you're cancelling, it could also be allotment or first call or final call. So that will be credited. Understand this systematically. While it was allotment, share allotment account debit to share capital was the due entry. The next entry was bank account debit to share allotment if you receive the allotment money. Now there is a problem. Allotment money not received. The company made further calls. Again, it was not received. So the company is opting for cancellation, forfeiture. So earlier you had made it due. So now there is no point of still showing it as due. So we will cancel it. So the entry will be reversed. Therefore, we are crediting share allotment and share calls. Here, if you observe, share capital would have been taken at called up value per share. So there would be some extra money, at least application money. So that is nothing but a saving to the company, which will be transferred to a separate account called as share forfeiture or forfeited shares account. So this is nothing but the excess money which is connected to this particular element of transactions, which belongs to the company itself, where all amounts due on allotment, first call and final call have been transferred to calls in arrears. Now this time the entry would be, see here what happened, we were just keeping the same accounts due, so we are cancelling out the same accounts. So there could be a situation where you have transferred this due elements to calls in arrears because the entire thing is not outstanding. So then the entry will be share capital account debit to calls in arrears. Remember, calls in arrears we would have debited because it is a receivable. So while it is received, we would cancel it out. Here it is not at all received. So we will credit to calls in arrears, representing there is no point of still showing it as receivable. So we would have received some excess money that will be transferred to share forfeiture account or forfeited shares account. This is a normal entry when the shares are issued at par. Next, forfeiture of shares which were issued at a premium. Now, in this case, we have to be very careful with respect to premium amount receipt. So, therefore, we will understand if premium is not received. If premium is not received means the money of collection point of time, the premium due is not yet arrived. So, in this case, what will be the forfeiture entry? Share capital account debit with respect to the called up value. Another important thing is securities premium account debit with the amount of securities premium not received. Understand, while we make it due, assume the premium is on allotment. So what would be the entry? Equity share allotment account debit to share capital to securities premium. Correct? Now, since there it was credited, now it is not at all received and there is no point of still showing it as a credit. So, we were cancelling it. Share capital debit, securities premium debit. 2. Share allotment, share first call, share final call, share forfeiture like what we saw on top. Next, if premium is received. Now, this is a very important point to understand. See, as I mentioned on top, there are restrictive uses for securities premium balance. So, there is no point of covering for forfeiture in that restricted usage. Basically, if we have to just put forward what are the restricted usage, premium which is transferred to securities premium reserve can be used either to issue bonus shares or with respect to redemption. Those activities are given as per law. So here, if premium is received with respect to forfeiture, there is no point for this usage of securities premium balance to share forfeiture activity. So therefore, if premium is not received, you will definitely not make the act of trying to cancel it out. Once the amount is transferred to premium, the amount is locked, because understand, it is nothing but representing reserves. You cannot randomly remove any amount from reserve balance. So therefore, if it is received, share capital alone will be debited. There will not be premium account. This is very important for you to observe. To share allotment, first call, final call, and then share forfeiture account. So this is the only difference. If premium is received, we will not cancel. So therefore, you will not see anything on the debit. If premium is not received, then no amount was transferred to securities premium account. So therefore, securities premium will be debited. I hope this is clear. If the premium is already received by the company, it cannot be cancelled even if the shares are forfeited in the future. That is, even if they are cancelled, it cannot be taken out from the balance. Next, forfeiture of fully paid up shares. See, the objective of forfeiture was non-payment of due amount. But there could also be a situation where the company can still forfeit even after the shares being fully paid up. Fully paid up means what? How much ever installment we were called up for, we are receiving every installment. So that is fully paid up. Forfeiture of non-payment of calls premium or the unpaid portion of the face value of shares is one of the many causes for which shares may be forfeited. That is what normally we see. But fully paid up shares can also be forfeited for realization of debts of the shareholders if the article specifically provided. So there is one exception. What we can see is if the article is specifically provide for realizing the debts of shareholders, then there can be a possibility where fully paid up shares can also be forfeited. I hope these points are clear. Next, after forfeiture, that is after cancellation, the company had anyway required money. So what would the company do? It can reissue. Reissue of forfeited shares. A forfeited share is merely a share available to the company for sale and remains vested. That is, the ownership still belongs to the company. Reissue of forfeited shares is not allotment of shares but only a sale. So understand this carefully. It is not the allotment of shares. So we will again not bring all of those steps. Application money, allotment due and then receipt. So it is just a sale of share. So what is the one simple sale entry? Bank account debit with respect to the sale money you are receiving. Two, with respect to what? Share capital. So I will credit to share capital. There is one point which you observe. See, when the forfeiture happened, you had some balance with respect to receipt for share forfeiture account there it was credited. Now reissue also can happen at par, premium, discount. Understand one thing, this is with respect to reissue. Discount means, assume for example, normal face value of the share is 10 rupees. There was a forfeiture, everything happened. So you at least receive some amount of this face value. Instead of again reissuing it at 10 rupees, assume I'm reissuing it at 9 rupees. So this is the discount we are talking about and not the prohibition levied as per section 53. So when this reissue happens at a lesser amount, this will be shown as a deficiency, transferring the amount to forfeited shares account because you are receiving lesser. You had already had some balances transferred to share forfeiture. We will utilize that balance, so we will debit it here. So after reissue, this was a one single entry for reissue. You have opened share forfeiture account. So imagine in the forfeiture, everywhere you are crediting share forfeited account, forfeited shares account, be it whatever situation. Now, when the shares are reissued at discount, we are using it on the debit side. Any balances left out will be transferred to an exclusive reserve account called capital reserve. So, forfeited shares account debit to capital reserve will be the entry, being the profit on reissue of forfeited shares transferred to capital reserve. So this will be the reissue entry. All these, whatever we understood, was issue of shares for cash. Another simple concept, issue of shares for consideration other than cash. That is, you're issuing shares but not with an expectation to receive cash. You're making purchase of particular asset. So for with respect to making the payment, rather than using full cash, you're issuing company shares. So that is the situation where you are issuing shares for consideration other than cash. See, sometimes a company may issue shares in a direct exchange for land, building, or other assets. Shares may also be issued in payment for services rendered by promoters, lawyers in the formation of the company. So, this is with respect to the professional services rendered to the company. These shares should be shown separately under the heading share capital, shown separately under the heading share capital itself because this is for consideration other than cash. So what will be the entry when the assets are purchased in exchange of shares? When the asset is purchased, the asset is coming to your business, so we'll debit it. So asset account debit. You are issuing shares with respect to the payment. If I had made payment, the entry would have been asset account debit to cash or bank. Since we are issuing shares, the entry is asset account debit to share capital account. I hope this is understood to all of you. Yes. So this completes our concept explanation from understanding the categories of capital issue with respect to premium, subscription, especially over subscription, pro rata, forfeiture, and then reissue. If you anywhere feel the concept is missing, first relook, revisit the same points. You will understand all of those in detail. Now let's understand some important questions, how it needs to be solved. First, the Delhi Artware Limited issued 50,000 equity shares of 100 each. This is with respect to equity shares and 1 lakh preference shares of 100 each. The share capital was to be collected as under. So it is happening in installments. There is a separate given for equity shares and for preference shares. On application allotment, first call and final call. All these shares were subscribed. Final call was received on 42,000 equity shares. How much was the total equity shares? 50,000. But they are only receiving final call on 42,000 shares and 88,000 preference shares. 1 lakh was the total preference shares. Prepare the cash book and journalize the remaining transactions in the books of the company. So understand the question first properly. Prepare the cash book. So they first of all telling have to prepare a cash book, and then for the remaining transactions present it in journal. What does this mean? See, if I recall the entries which needs to be passed in installments, when it received of application, what is the entry? Cash or bank account debit to share application. Now, do you see the cash element involved here, which finds its place in cash book? So this will be recorded in cash book. Remaining transactions mean what? This application money should be transferred to share capital. So what will be the entry for that? Share application account debit to share capital. So that will be reflected where? In the journal. I hope you understand what does remaining transaction, what the entry to be taken in cash book means. So we will prepare the cash book and then remaining transactions in the books of the company. There are two categories. One is equity shares and preference shares. First, for equity, on receipt of application. So what is the entry? Bank account debit to equity share application. Likewise, when I receive preference share to preference share application. Yes, so there is bank or cash involved. So we will first record this in the cash book. To equity share application, and then to preference share application. How much was for equity? Total number of shares is 50,000. On application, they're receiving 25. So this is 12 lakh 50,000. Preference shares is 1 lakh into 20. This is 20 lakh. So this is the first entry. What is the subsequent entry? Application money should be transferred to share capital. So share application account debit to share capital. So there are two shares, equity share application to equity share capital, preference share application to preference share capital. So since there is no cash involved, nothing will come in cash book. Equity share application account debit. I will pass one combined entry because it becomes simpler. You can also pass separate entries for equity and separate for preference. Both prescribe same answer. Preference share application account debit to equity share capital account to preference share capital account. I hope all of you understood what we did. So equity share application is how much? 12 lakh 50 and 20 lakh. So 12 lakh 50 for again share application, 20 lakh being application money transferred to share capital. So we have completed the entries with respect to application. Second scenario, allotment. So first we have to make it due. So what is the due entry? Equity share allotment account debit to equity share capital. For preference share allotment account debit to preference share capital. No cash involved. So we will record this as a journal entry. Equity share allotment account debit. Preference share allotment account debit to equity share capital account and to preference share capital account. So what is the allotment money installment for equity? 20. So 50,000 into 20. 10 lakh, 10 lakh. For preference, it is 30 rupees. So 1 lakh into 30, 30 lakh and 30 lakh. Being share allotment money made due. Next, so receipt of allotment money. So what is the entry then? Cash account debit to equity share allotment to preference share allotment. I am receiving the money. So that will have an impact in cash book. To equity share allotment to preference share allotment. So how much was equity share allotment? 10 lakh and preference 30 lakh. I hope till here all of you comfortable. Next, till first call there was no problem. So first call also we will have to make it due. So what is the due entry? Equity share first call account debit to equity share capital. For preference, preference share first call account debit to preference share capital. So equity share first call account debit, preference share first call account debit to equity share capital, and then to preference share capital. So what is the first call money due for equity? 30 rupees, 50,000 into 30. 15 lakh. For preference, it is 20 rupees. So 1 lakh into 20. Being first call money made due. What is the next entry? Receipt of first call money. So when I receive, what is the journal entry? Cash account debit to equity share first call account to preference share first call account. To equity share first call. What was the value we took? 15 lakh and 20 lakh. To equity share, sorry, to preference share first call account. This was 20 lakh. Next, final call. First of all, with respect to due entry, there will be no impact of how many shares actually received. So what is the due entry? Equity share final call account debit, preference share final call account debit to equity share capital to preference share capital. So first we can record that. Equity share final call account debit, preference share final call account debit to equity share capital to preference share capital. So what is the final call installment? 25 for equity, 30 for preference. So 50,000 into 25, 12 lakh 50,000. For preference, it was 30 rupees. So 30 into 1 lakh, 30 lakh, being final call money made due. Next, what is the next entry? Receipt of call money. Now let's read once again the adjustment. Final call was received only on 42,000 equity shares and 88,000 preference shares. So at the time of receipt, there is a 42,000 receipt, means 8,000 shareholders haven't paid. So this will be considered as a receivable and transfer the balance to calls in arrears. So when this is a case, what do you think the journal entry would be? So let's roughly understand here. What is the journal entry? Bank account debit, calls in arrears account debit to equity share final call, because I will have to cancel it out here. Now with respect to equity share final call, what is the amount we have already made due? 12 lakh 50. Now if I have to present this, 12 lakh 50. You have received only from 42,000 shareholders. 42,000 into 25. You have received 10 lakh 50,000 alone. So what is the balance? 2 lakh, which is standing as calls in arrears. Now why did I make you understand this entry is the question is clearly telling you have to record the entries in cash book and only remaining in the journal. Now, if you observe, we will have to break this transaction because partial will go to cash book and the other half will go to journal. So, how do we record this? Whatever is representing for 10 lakh 50 will appear in the cash book. To equity share final call account. The amount which I enter is 10 lakh 50. Be very, very careful. So in the journal entry, what will be remaining? Calls in arrears account debit to equity share final call with 2 lakh. So this is how we will present the entry. The same applies for preference as well. So first we will record this entry. Calls in arrears account debit to equity share final call account. How much? 2 lakh, because for 10 lakh 50 we have already reflected in cash book. Being 8,000 shareholders unable to pay final call amount. Next, likewise, for preference shareholders also, what is the entry? Bank account debit, calls in arrears account debit to preference share final call. How much is the transfer I've made to preference share final call? 30 lakh rupees. But I am only receiving money from 88,000 applicants. 88,000 into 30. I'm only receiving 26 lakh 40,000. So this will be entered here to preference share final call account. 26 lakh 40,000. So what is the remaining entry? Calls in arrears account debit to preference share final call account. So what will be the amount due? What will be the amount due? You had transferred 30 lakh, 2640 given 30. So this will be 3 lakh 60,000. being 12,000 preference shareholders failed to pay final call amount. Is this clear? Yes. So this completes our journal entry. We will close the cash book. 1250 plus 20 lakh plus 10 lakh plus 30 lakh plus 15 lakh, 20 lakh, 10 lakh 50, 26 lakh 40,000. So by balance carried down 14, this will be 1 crore 44 lakh 40,000. 40,000. So this will be our closing cash book. So this question, why I picked up here was to just give you that comfort with respect to installment entry and also presentation in cash book. Already one time this question has appeared in the exam. So it can anyway be expected in the upcoming attempts also. So this practice was definitely required. That is how it gets presented in cash book, especially these two entries. You will only record partial here and the other half will be presented in the journal. Most of the students miss out on that. So that needs to be taken care. These two. Clear? Done. So moving on to next question. This was an exam question, a very important one, which came for direct 15 marks. So this gives you a good practice with respect to calls in arrears and the interest component. So let's understand. A Limited issued 20,000 equity shares, 10 each at a premium of 10%. So whenever you come across such things, make sure you just write down the breakup. So 10 each at a premium of 10% means on 10, 10%, 1 rupee is the premium, payable 2 on application, 4 on allotment, including premium. So what does including premium means? 3 rupees is your allotment money and 1 rupee is your premium. 2 on first call. This is first call. And balance on the final call. So what would be the balance? 2 plus 4 is 6. 6 plus 2, 8. The total amount here is 11 rupees because it should also include premium. So what is the balance? 3 rupees. Is this understood? 4 to 6, 6 plus 2, 8 and then 3 for 11. So this is for final call. Clear? Yes. All the shares were fully subscribed. So there was no problem with respect to over or under subscription. This point is clear. Mr. M, who held 2,000 shares, paid full remaining amount on the first call itself. See, with respect to installment, there was first call and final call. But Mr. M, who held 2,000 shares, is paying this outstanding amount on the first call itself. The final call, which was made after 4 months from the first call, was fully paid except a shareholder having 200 shares and one another shareholder having 100 shares. They paid their due amount after 3 months and 4 months respectively, along with interest on calls in arrears. Company also paid interest on calls in advance to Mr. M. See, if you observe, remember what points we understood. The rate of interest will not be available. We should know what is the rate of interest because this is prescribed as per law and not specific case as it has to be mentioned in the question. The company maintains calls in arrears and calls in advance account, give journal entries to record these transactions, show workings of interest calculation. So they have given us the enough data with respect to the details. So first they are asking us the journal entries. Let's begin the question. So first normal entries, receipt of application money. So what will be the first entry? Share application money received. So bank account debit to equity share application. So there are no dates mentioned. Bank account debit to equity share application. So what is the number of shares? 20,000 into 2 rupees. This will be 40,000 being share application money received for 20,000 shares. Clear? Next. This application money needs to be transferred to share capital. So the entry will be equity share application account debit to equity share capital. 40,000 and 40,000 being application money transferred to share capital. Is this clear? Guys, are you all solving along with me? Please focus. Next, we have to make allotment due. Understand there is a premium considered here. So 1 rupee is the premium. So what will be the entry? Equity share allotment account debit to equity share capital to securities premium account. So what is the number of shares here? 20,000. What is the premium amount? 1 rupee. So 20,000 into 4 first. That will be 80,000. 20,000 into 3, 60,000. And 20,000 into 1, 20,000. Being allotment money made due. So first we made it due, then we will receive the allotment money including premium, bank account debit to equity share allotment account. How much was due? 80,000. Being allotment money received including premium of rupees 1 per share. Is this clear? Yes. Next, Mr. M, who held 2,000 shares, paid full remaining amount on first call itself. So first of all, we have to make it due with respect to first call. So what is the due entry? Equity share first call account debit to equity share capital. So what is the first call installment? It is 2 rupees into 20,000. So 40,000 being first call money made due. Now next entry should be bank account debit to equity share first call account. Now understand one thing. You had supposed to receive how much? 40,000. But the question clearly says M, who held 2000 shares, paid full remaining amount on first call itself. So 2000 final call amount was how much? 3 rupees. So he is also paying 6000 extra. So when I receive with respect to bank account, 40,000 plus 6,000 is what I debit. 46. But for equity share first call, I can only reverse how much I made it due. So how much did I make it due? 40,000. Where will the balance go? Calls in advance. I hope all of you understood this. Calls in advance. He had held 2000 shares. Final call money was 3 rupees. So this will be 6,000. Is this clear to all of you? Being first call money received along with advance for final call with respect to 2000 shares. I hope all of you understood this point. Yes. So this happened when, so understand this carefully, guys. This happened when the first call money was received. The question says the final call which was made 4 months from the first call. That means this is indicating that we have to also calculate interest. So interest on calls in advance. So we will make this as a working note. Interest on calls in advance. So what is the advance money? 6,000. So how did we get 2000 shares into final call money? What is the rate of interest for calls in advance? Calls in advance is what company pays. So company pays more, 12% into how many months? The question says it is for 4 months. See, it is for 4 months. After 4 months into 4 by 12. So 6,000 into 12% into 4 by 12. So this will be 240 rupees. So we have calculated interest on calls in advance. Likewise, we'll also calculate for calls in arrears. So it becomes easier with respect to continuing the journal entries. There were two shareholders paying at different timelines. Okay, from the first call was fully paid except a shareholder having 200 shares and one other shareholder having 100 shares. They paid their due amount after 3 months and 4 months respectively. So 200 for 3 months and 100 shares for 4 months. We will do it separately for 200 shares. 200 into 3 rupees, that is the final call amount, into, this is your income, 10% for 3 months. This is 3 months only, right? For 200, 3 months and 4 months for 100. So how much will this be into 3? Into 10% into 3 by 12. So this will be 15 rupees for 100 shares. 100 into 3 into 10% into 4 by 12. So this will be 100 into 3 into 10% into 4 by 12. This is 10 rupees. The question clearly says makes workings for interest. So we have done that. Now let's continue with the entry. We had completed with the first call. Next, making final call due. Normal entry, making it due first. So final call is at 3 rupees, 20,000 shares. What would be the entry? Equity share final call account debit to equity share capital account. Now 20,000, 3 rupees, so 60,000. Being final call money made due. Clear? Next would be receipt entry. Bank account debit to equity share final call. Now, why have I written this? Will explain. To equity share final call, how much I was supposed to receive? 60,000. Correct? Now, with respect to this, understand one thing. I had already received an excess amount of 6,000. Yes. Now was the actual time to receive the 6,000. I had received it earlier. So don't you think with respect to this money made due, I will have to adjust. So calls in advance was credited. Now I will utilize this here. So I will debit. Calls in advance. How much? 6,000. Next, the question confirms that there was two set of shareholders who didn't pay the call money. So that is nothing but their calls in arrears. So calls in, it is a receivable. So therefore I am debiting calls in arrears account debit. One was holding 200 shares, other was holding 100 shares. So totally 300 shares with respect to call money 900. Understood this? Yes. Now how much will go to bank? Just a minute. So to calls in arrears, how did I get 200 plus 100 shares into 3 rupees, the final call money. So for bank account, how much I was supposed to receive? 60,000. I've already received 6. Yes or no? Minus 900. 60,000 minus 6,000 minus 900. This will be 53,100. I hope all of you understood this point. Being final call money received, call advance adjusted, and 300 shareholders did not pay final call money. So this communicates, that's why we have transferred to calls in arrears. I hope this is understood. Further, we will have to record this interest. So just to confirm, we will have to also know whether the company has been receiving these calls money any date in future. Yes, see here. The final call which was made after 4 months from the first call was fully paid except a shareholder having 200 shares and one shareholder having 100 shares. They paid. So this is the point. They paid their due amount after 3 months and 4 months respectively, along with interest on calls in arrears. Company also paid interest on calls in advance to M. So first we will record the entry for calls in advance. See, for calls in advance, first we will have to make it due. Interest on calls in advance. This is an expense to the company. So what will be the entry? Interest on calls in advance account debit. We have already understood this conceptually, guys. That's why I'm passing the entry to shareholders account. So what was the amount of interest on calls in advance? 240 rupees. Being interest on calls in advance made due. Now, when I was supposed to make this final call, I will also pay it to the shareholder. So, next entry would be shareholders account debit to bank account. This is nothing but paying the interest. 240, 240. Being interest on calls in advance paid to shareholder. So this interest is a nominal account that will get transferred to P&L at the year end. So we have done for interest on calls in advance. Then there was shareholders paying at two different set of installments. So we cannot merge it here. We will pass the separate entry for this. So first for 200 shares, when he actually receives, I will also have to consider the interest component. So please understand this carefully. First, what we will do is we will make the interest component due. Interest on calls in arrears is a receivable to the company. So what will be the entry? Shareholder account debit to interest on calls in arrears. So what was interest on calls in arrears for 200 shares? 15 rupees. Now when he actually pays, so what will be the entry? You receive the money, bank account debit. Yes or no? So calls in arrears, if you remember, we had shown it as a debit in the form of receivable. So we will credit it to calls in arrears account. For 200, 3 rupees, 600. So interest on calls in arrears is nothing but to be paid. Who will pay you? Shareholder. So to shareholders account. So 600 plus 15. This is 15 rupees. 600 plus 15. All of you understood this entry. Calls in arrears was debited, shown as a receivable. So we are receiving the money. So we are cancelling. So credited here. 15 which was due, I am collecting. So therefore credit to shareholders. Likewise for 100 shares. Shareholders account debit to interest on calls in arrears account. What is the amount? 10 rupees. Bank account debit to calls in arrears account to shareholders account. To shareholder it is 10 rupees. 100 into 3, 300. So this is 300 plus 10, 310. So you will accordingly write the narration with respect to individual shareholders being interest on calls in arrears made due and then interest received along with call money. So if I just want you to explain once again how are we getting those values, see, understand here. First, for calls in arrears, if you remember, first we took for 200 shares into 3, that's why 600. Then 100 shares into 3, that's why 300. So both recorded separately. See here, one for 600 and one for 300. That's what we have cancelled it out. I hope you understood all of the entries. This question had come in the exam 15 marks, guys. I guess this was appeared in probably May 2022 attempt, I guess. So you can just cross check that one. So this was an easy question focusing more on interest component. I hope this would definitely fetch you full marks if you have conceptually understood. Question. Pant Limited invited applications for 50,000 equity shares at rupees 50 each, which are payable as on 50, 20, application 20, on allotment 10, and on first call, first and final call 20, both together, first and final call. See, which are payable as on application 20, allotment 10, and first and final call 20. The company received applications for 60,000 shares. Number of shares which was invited for application is 50. Balance is 60. So the company has received over subscription. The directors accepted application for 50,000 shares and rejected the rest. So it is nothing but we have to refund. Show journal entries if company refunded the application money to rejected applicants and allotment money was received for 45,000 shares. So that means balance there is a call. So we will record the entries for this. First, there are no dates again. So first, receipt of application money, bank account debit to equity share application account. How much was number of shares? 50,000. Sorry, you are receiving applications in extra. So 60,000 into 20 rupees. So this will be 1,20,000. This will be 12 lakh. Being application money received for 60,000 shares. Now the company is accepting applications only for 50,000 and rejecting the rest. Show journal entries if company refunded the application money to rejected applicants and allotment money was received for 45,000 shares. So first of all, next, while we make the transfer entry to share capital, at the time only we have to refund this. So what will be the entry there? Equity share application account debit to equity share capital. So this was being the normal entry, right? But since there is a refund given, so there will be to bank as well. How much to share application? We had taken 12 lakh. So in this 12 lakh, we are just receiving for 50 lakh into 50,000 into 20. So this will be 10 lakh and balance 2 lakh is being refunded. Being application money transferred to share capital for 50,000 shares and excess application money received is refunded. Is this clear? Yes. So how did we get for bank? 10,000 into 20. Clear all of you? Yes. 10,000 was the extra application because 50,000 was issued, 60,000 was received. Next, we have to make the allotment entry. Equity share allotment account debit to equity share capital. So number of shares is 50,000, allotment money is 10 rupees. So this will be 5 lakh. Being allotment money made due on 50,000 shares. The question is clearly communicating that allotment money was received only for 45,000 shares. So what will be the next entry? Bank account debit. For only 45,000 we received 10 rupees. So this will be 4,50,000. Where did the balance go? Calls in arrears account debit How much? 5,000 into 10, because for 5,000 shares only we didn't receive the allotment money. This will be 50,000 to whatever I had debited for equity share allotment, to equity share allotment account, 5 lakh, being allotment money received on 45,000 shares. Show journal entries if the company refunded the application money to rejected applicants. We have shown that. And allotment money was received for 45,000 shares. So both entries are recorded even though there is call. So here, since allotment money had a due, we do not know whether it was received or not. So we can stop the entry here, recording application, application refunded, and then allotment due, allotment money received. I hope this question was clear to understand the concept of refund of application. Now, next question is very important because this gives us a good conceptual hold on pro rata concept. So, this is also important from the exam point of view. This is your study material question. Let's practice it with proper focus, guys. Yes. JHP Limited is a company with an authorized capital of 10 lakh in equity shares of 10 each. So, we are not interested with authorized because that is nothing but the maximum capital, of which 6 lakh shares had been issued and fully paid on 30th June 2021. Understand the story here. 6 lakh shares had already been issued and this was fully paid. So we are not concerned about it anyway because the entries would have already been done. The company proposed to make further issue of 1 lakh of these shares at 10 rupees, at a price of rupees 14 each. That means there is a premium of 4 rupees. The arrangement for payment being 2 per share payable on application to be received by 1st July. Here we should be very careful. They are mentioning dates. On 1st July. Allotment to be made on 10th July and a further rupees 5 per share including premium to be payable. So let's write down the breakup here. There is 14, 10 rupees at share price 14. So 2 on application. Allotment to be made on 10th July and a further 5 per share including premium to be payable. We understood that 4 itself is a premium. That means on allotment we are just receiving 1 rupee. Allotment, the final call for the balance to be made and the money received by 30th April. So what is the balance amount? 5 plus 2, 7. Balance is 7 rupees. So this is on final call. Yes. Applications were received for 3,55,000 shares and were dealt with as follows. See, understand, again revisit the question. How much was issued? Just 1 lakh shares. But what is the application response? They are receiving 3,55,000 shares. Higher over subscription received. Now, what are they telling? How is this being considered? Applicants for 5,000 shares received allotment in full. So what does it mean? They are just categorizing this now. 3,55,000 is divided into different branches. So first branch, 5,000 shares allotted and that was received in full. So they had applied for 5,000, they also got 5,000. This is what it means. Second, applicants for 30,000 shares received an allotment of 1 share for every 2 applied for. No money was returned to these applicants, the surplus on application being used to reduce the amount due on allotment. Let's break up this and understand. We will make a working note for this. I can do one thing. Instead of scrolling, I will just make it here and then take it down. This is just for you to understand. If I just scroll so long, you might also miss out on the point. So therefore, I will write this as application allotment. So initially, applications received for 3,55,000 shares, but the company can allot just 1 lakh shares. This is the normal overview. In the first category, 5,000 shares was applied for and 5,000 is allotted. Second scenario, Applicants for 30,000 shares received an allotment of 1 share for every 2 applied for. First, let's understand. There were 30,000 applications received. You are taking 1 share for every 2 shares applied for. That means if I have to simplify that, you are applying 2 shares, but you are getting just 1 allotment. So if this is a scenario, how much is it for 30,000 shares? How can I find this out? 30,000 into 1 divided by 2. What did I do? We just understood as a cross multiplication. So if I do this, I get 15,000 shares which has been allotted. I hope this point is understood. Next, no money was returned to these applicants. That means they have received extra, but they are not returning any money to these applicants. Further, what they are doing, the surplus on application being used to reduce the amount due on allotment. So this is nothing but a pro rata scenario. This is a pro rata done. Next category. Applicants for 3,20,000 shares received an allotment of 1 share for every 4 applied for. Similarly, applications was received for 3,20,000 shares. Now in this they are telling 1 share for every 4 applied for. That means 4 I applied, I was allotted 1. So how will this be written? 3,20,000 into 1 divided by 4. So 3,20,000 divided by 4 will be 80,000 applied for. All of you first understood this? Yes? Next. The money due on allotment was retained by the company. The money due on allotment was retained. That means they are not returning it to the applicants. The excess being returned to the applicants. Now this excess to be understood carefully. We will understand this in detail. And money due on final call was received on the due date. You are required to record these transactions including cash items in the journal of JHP Limited. I hope all of you first of all understood this working note. So let's put this down. We understood the number of shares. So this, if you observe, this was first category. 3,55,000 applied for, 1 lakh being allotted. Now for this, they have given the bifurcation. If you just observe, see, 5,000 plus 30,000 plus 3,20,000 is nothing but 355 on the application side. 5,000, 15,000 and 80,000 is nothing but 1 lakh on the allotment side. This is allotted in different category. That's what we understood in working note number 1. Now let's understand in working note number 2 with respect to the excess money received and their treatment. So since if you observe, for 5,000, there was 5,000 allotted. So there is no question of having a differentiation here. The problem comes only for these two, 30,000 and 3,20,000. So we can just consider that. See, in your study material, there is a big table of calculation. If you are comfortable with that, you can go with it. If not, you can follow this simple approach. How to find out the excess amount, how to allot for the allotment, all of those things. So since there are two categories, 30,000 shares and 3,20,000 shares. What am I writing here? Number of shares applied for. So what will I first denote? Excess application money, because the question has its points here itself. Excess application money received. Now if you observe, 15,000 is allotted in the first case for 30,000 shares. So how much is the excess application? 15,000. So 15,000 into what was the application money? Application money was 2 rupees. Yes. So 15,000 into 2. This will be 30,000. All of you understanding here? Yes. Similarly for 3,20,000 shares, how much was extra received? I applied for 3,20,000, got only 80,000. How much is extra? 2,40,000 is extra. How did I get 3,20,000 minus 80,000 into application money is 2 rupees. So this will be 4,80,000. So this is the excess application money received. What does the question says? For the first case, that is 30,000 share, no money was returned to this applicant. That means they are adjusting this with the allotment due. For the next scenario, money due on allotment was retained by the company. They are still using that for also allotment. Any excess being returned to the applicant. So first we will do it one by one. We have to find out how much is the money due on allotment. Money due on allotment. So here we'll also take the premium amount. So premium, if you observe, the installment of allotment was how much? 5 rupees. 5 rupees. So 15,000 into 5. This will be how much? 75,000. Next, how much was due on allotment? I can only allot 80,000. In this case, I can only allot 80,000. So 80,000 into 5. So this will be how much? 4 lakh. I hope comfortably all of you understood till here. Next. Now I have to just find out how much of the amount is required to be adjusted. Excess money adjusted with allotment, or I can write excess money adjusted towards allotment. How much is the excess money available? 30,000. So I will adjust this completely because allotment money due was 75. If I go with the next category, allotment money due is how much? 4 lakh. How much is excess available? 4 lakh 80. So can I utilize fully 4 lakh? Yes. Now after providing for this, allotment money due. 75,000 was totally due. I was able to adjust 30,000. So allotment money due is 45. If you observe here, 4 lakh was due, 4 lakh completely set off, so nothing is due. Is this point understood? Yes. Now the question in the second category clearly specifies, see, read here. The money due on allotment was retained. We already gave 4 lakh. The excess being returned to the applicant. So we anyway have extra 4 lakh 80, 4 lakh. How much is returned to the applicant? 80,000. This is returned to applicants. So this is nothing but your pro rata arrangements need to be done. So all of these points we will reflect in the journal entry. First, there is application money received. So what is the application money received date? Application money to be received by 1st July 2021. Bank account debit to equity share application account. So I was supposed to issue 1 lakh, but in return I got how much? 3,55,000. This was for 2 rupees. So 3,55,000 into 2 rupees, 7,10,000. Being share application money received on 3,55,000 shares. Clear? Next. Next, there is an allotment which needs to be done. So here we will have to consider the impacts what we just calculated. Allotment to be made on 10th July and a further rupees 5 per share including the premium to be payable. So next, first of all, we have to make the transfer entry for this. The transfer entry happens on the date of allotment. So 10th July, equity share application account debit. How much? 7,10,000. To equity share capital account. Let's logically write down the amount. How much was issued? 1 lakh. So I can only transfer how much was I issued for. 1 lakh for 2 rupees will be 2 lakh. 2, I had adjusted some amount towards allotment. So to equity share allotment account. And some of the amount was also refunded. So therefore to bank account. To equity share allotment, how much did I transfer? See here, if you observe, excess money adjusted towards allotment was 30,000 and 4 lakh. So how much did I adjust? 4 lakh 30,000. 4 lakh 30,000. On the same working note, there was also amount returned. How much? 80,000. So 80,000. So you can refer working note 2 for these calculations. So if you now consider, does it come to 7 lakh 10? Yes. Being application money transferred to share capital adjusted towards allotment and refunded. So this was an important entry to provide your pro rata impact. Next will be allotment. So this is happening, allotment to be made on 10th July. 10th July 21. So equity share allotment account debit. Remember there is a premium to equity share capital account to securities premium account. How much was allotted? How much was allotted? Total 1 lakh. How much is the allotment money due? 5 rupees. So 1 lakh into 5 will be 5 lakh. How much will go to share capital? Only 1 rupee. So that will be 1 lakh into 1, 1 lakh. 1 lakh into 4, securities premium. Being allotment money made due including premium. Clear? Next. So now we will have to receive the allotment money. Bank account debit to equity share allotment account. How much will I receive? See, understand one thing, equity share allotment was 5 lakh. This was made due. Now for every debit when you cancel out, we will have the credit observation. So if you observe for application itself, we already adjusted 430 out of this 5 lakh. So how much is remaining? 70,000. Now if you also observe the working note, how do you understand that? See, 45 was anyway due. 45 was anyway due, correct? There was also that 5,000, 5,000, 45,000 plus 5,000. This was supposed to be received. So that is considered here with respect to the number of shares, considering also the premium value. Being remaining allotment money received. So this will also be including premium. Clear with this? Next point. So next point is about call. The final call for the balance to be made and the money received by 30th April. So we will first make it due. We will take the same date since they have given the receipt date as 30th April. Equity share final call account debit to equity share capital account. How much was the final amount due? 7 rupees. So this will be 7 lakh, because 1 lakh shares into 7 rupees being final call money made due. So they are telling that on 30th April, we also received the final call. So bank account debit to equity share final call account. So this is how much? 7 lakh and 7 lakh being final call money received on 1 lakh shares. All points clear? The important in this was with respect to your pro rata adjustments. If you just first understand how much is applied for, how much is allotted, it will become more easier for you to calculate to make this working table. To just explain this once again, what you have done is first jot down how much is the excess application money received, because using that only we can adjust it towards allotment or refunded back. So we must find that out. Excess application money for 30,000 shares extra received for 50,000. For 3,20,000 shares excess application was 2,40,000 into application money. Then we found out how much is the actual money due on allotment. For this, we made use of the number of shares allotted. For 15,000 shares, 15,000 was allotted into allotment money. And for 3,20,000 shares, 80,000 was allotted. So 80,000 into 5. So now we have the allotment money due. We can now adjust the excess application money. So 30,000 was there. We completely gave for first category. For the second category, 4,80,000 was available. So 4 lakh was given. Balance was nothing but allotment money due. And then the return to applicants is 8,000. I hope this point is understood to all of you. Yes? Fine. Yes, let's move to question number 5. Beautiful Company Limited issued 30,000 equity shares of 10 each, payable as rupees 3 per share on application. So 10 each, 3 on application, 5 per share including premium. So that is 3 plus 2 on allotment and 4 per share on call. All the shares were subscribed. Money due on all shares was fully received except from Ram holding 500 shares, who failed to pay the allotment and call money, and Sham holding 1,000 shares who failed to pay the call money. All those 1,500 shares were forfeited. That is 500 of Ram and 1,000 of Sham. Of the shares forfeited, 1,250 shares including whole of Ram shares were subsequently reissued to Jadu as fully paid up at a discount of rupees 2 per share. So when they mention fully paid up, that means for 10 rupees it was totally raised, but in the reissue process they are giving 2 rupees as a discount. So first of all, they are asking us to pass the journal entries to record forfeiture and reissue. See, if you observe in the question, they are giving us the complete story starting from application, allotment, and then call. But when the question specifically mentions to record only forfeiture and reissue, we'll only write down those entries, because you have to decide when you attempt the question based on the marks and the time is required to invest. If you start from application, it will definitely take a lot of time because it involves more entries. So the question is clearly mentioning us to record forfeiture and reissue, so we'll only record those. First of all, why is the forfeiture happening? Because of two shareholders. One is Ram, who failed to pay allotment and call, and one more is Sham, who failed to pay call. Let's recall whatever we discussed with respect to forfeiture. Imagine there was two situations: security premium amount received, security premium not received. One situation was if security premium was not received, any amount was not transferred to security premium reserve, so we can cancel it. If security premium amount was received, we will definitely have to ignore, because once amount is locked in security premium reserve, we cannot again utilize it by reversing it. In this case, what is the point to observe? Ram, holding 500 shares, failed to pay the allotment money. Now, if you observe, the premium is tagged along with allotment. So, Ram did not pay allotment money altogether. So, here we should be very careful that security premium account will be cancelled. So, how will the reflection of entries be? There are no dates mentioned. So, equity share capital account debit, securities premium account debit, 2. Cancellation is happening for allotment money and call money. Equity share allotment account. 2. Calls in arrears. And then the balance will go to share forfeiture. To equity share forfeiture account. So how much for the share capital? Totally 1500 shares are getting cancelled. 1500 into 10. So this will be 15,000. How much for securities premium? This is only with respect to shares held by Ram. 500 shares into 2 rupees as the premium. So this will be 1000. All of you understood till here. Next, to equity share allotment. This was with respect to the shares held by Mr. Ram. 500 into how much equity share allotment. See, understand, while we make it due, what is the entry we will pass? Equity share allotment account debit to equity share capital to securities premium. So equity share allotment would have been debited including premium. So here also do not miss out on that point. So 5 rupees is your total amount including premium. So 500 into 5. So this will be 2500. So there was non-payment of call from both Ram and Sham, 1500 shares. So 1500 call money was 4 rupees, 6000. So how much is the amount which goes to share forfeiture? 7,500. Now here you have two options. One, to find this out as a balancing figure. Another one, conceptually, if we have to understand what amount goes to share forfeiture, those which has been transferred to share capital. Yes or no? Now what was transferred to share capital? Application money was already transferred to share capital. On this 1500 shares, application money was 3 rupees. How much is this? 4,500. Now, with respect to Ram, allotment money itself also got cancelled. But for Sham, allotment money was received. Yes or no? How much is the allotment money? 1,000 rupees into how much is the allotment money? I'm only asking allotment because premium gets cancelled here. 1,000 into 3 rupees. How much is that? 3,000. See, first of all, an application, both of the shareholders will give. So, how much is that? 1500 into 3 rupees plus 1000 shares, which is denoting for Sham, into 3 rupees. So 1500 into 3 is 4500. 1000 rupees into 3 is 3000. So totally adding up, we will get 7500. I hope you all understood this point. Being 1,500 shares forfeited for non-payment of allotment and call money. Clear with this? Next. So next entry would be with respect to reissue. All those 1,500 shares were forfeited. Of the shares forfeited, 1,250 shares were subsequently reissued and fully paid up at a discount of 2 rupees per share. First, we will record the entry for reissue. What is the entry? Bank account debit. This is happening at discount. So therefore, share forfeiture will also get debited with respect to the discount amount given. Equity share forfeiture account debit to equity share capital account. So 1,250 shares are issued at 10 rupees. So this will be 12,500. How much I am using it at discount? So 1,250 into 2, that is 2,500. 1,250 into 8, this is 10,000. Being 1,250 shares reissued, providing rupees 2 as discount. Clear? Now we have understood the entry of reissue. Now the point here is how much should be transferred to capital reserve should be calculated. See, in this question, there was total share forfeiture credited by 7,500 and with respect to discount, we have used 2,500. Can we just net off this as we normally do and transfer to capital reserve? No, not possible. Why? Because the number of shares which was forfeited was 1,500, whereas the number of shares which is reissued is 1,250. Also, the question is clearly giving one additional point. Of the shares forfeited, 1,250 were subsequently reissued. This 1,250 should take complete shares of Ram representing 500 and balance 750 of Sham. So to understand how much should be transferred to capital reserve, we will make a working note. Ram and then Sham. So first we will find out how much is the amount transferred to share forfeiture. Ram held 500 shares. Amount transferred to share forfeiture is nothing but how much money cannot be taken back or cancelled. Ram did not pay allotment and call money. So application money would have been transferred. So application money is 3 rupees. 500 into 3 left 1,500. Sham has 1,000 shares. Sham did not pay only call money. Remember here we can only take how much is transferred to capital. Securities premium will not come. Sham had already paid application and allotment. Application is 3 rupees. Allotment is 3 rupees. I should not consider premium. Here be very careful. So this will be 6 rupees. Minus utilizing towards discount on reissue. So this discount is happening at 2 rupees. Full of Ram shares is used. So 500 into 2,000. Whereas for Sham, only 750 shares is used into 2,500. So how much is remaining? 500 here. So this is with respect to the total amount being transferred. But here we will have to consider the base of shares which is being reissued. So in order to make them common, so I will just change this to 750 because ultimately 750 number of shares is what is being used. So 750 into 6 is 4,500 minus 1,500. So this will be 3,000. So total amount that is transferred to capital reserve will be 3000 plus 500, 3500. So what is the journal entry for this? Equity share forfeiture account debit to capital reserve. To capital reserve account. How much? 3500. So this we have understood using working note. Being balance in share forfeiture transferred to capital reserve. Understood? Next. This was the entries with respect to forfeiture and then reissue. We have clearly understood this with all the points and working notes. Next question. Again, an important question. This is an exam question. So this had appeared for 15 marks. So let's practice it, understand every point in detail. So one final question to revise the entire concept. BP Limited issued a prospectus inviting applications for 1,20,000 equity shares of 10 rupees each at a premium of rupees 2 per share payable as follows. So there is a premium. 10 rupees means 12 rupees is the issue price. 3 on application. Then 5 on allotment, including premium. 2 rupees was the premium, so 3 rupees will be on allotment. And then 4 on first and final call. So this will become 12. Applications were received for 3,60,000 equity shares. How much is the invitation for? 1,20,000, but they have received it for 3,60,000. Applications for 80,000 shares were rejected and the money was refunded. So for 80,000, there is an outright rejection. Shares allotted to remaining applications are as follows. So 3,60,000, they have refunded 80. So remaining is 2,80,000. So that is taken in different two categories. Category 1 for 1,60,000, category 2 for 1,20,000. So number of shares allotted is also directly given. So if you remember in the previous question, we were supposed to find out how much was the shares applied for. Further, excess money received with application was adjusted towards sum due on allotment. Same points what we saw was adjusted and the balance amount is returned to the applicants. First, we will make use of how much is due for allotment and any excess remaining will be given for allotment applicants. All calls were made duly received except the first call by a shareholder belonging to category 1. So category 1 and 2 is going for pro rata allotment who has applied for 680 shares. This is where most of the students miss out. See, if they just see 680 shares duly received except call, they tend to go with 680 itself. But understand one thing, we have to allot it. We have to consider how much shares is allotted and then take the allotment money due. His shares were forfeited. He didn't pay what? Final call. The forfeited shares were reissued at 13 per share, fully paid up. So this is reissued at premium because 10 rupees is my normal face value. Pass necessary journal entries for the above transactions in the books of VP Limited. Open calls in arrears wherever required. Now, if you observe, if you remember in the previous pro rata question, we had made two working notes. One was to just find out how much shares applied and how much is allotted. Second was to find out how much is the excess money adjusted towards allotment. So we will also do that working note here too. So there are two categories. Category 1 and then category 2. How much is the excess application money received? Number of shares allotted is 80,000. Number of shares applied for is 1,60,000. So 1,60,000 minus 80,000 is 80,000. Application money is 3 per share. 80,000 into 3. This is 2,40,000. Next category. 1,20,000 shares applied. Number of shares allotted is 40. So 1,20,000 minus 40. Excess application is 80,000 into 3. 2,40,000. Next, allotment money due. How much is allotted? 80,000 and 40,000. Here we will also include premium. So 5 rupees, 80 and 45 rupees. 80,000 into 5, 4 lakh. 40,000 into 5, 2 lakh. Now excess application money adjusted towards allotment. Allotment money due is 4 lakh. Excess application money is available at 2 lakh 40. So completely we will utilize 4 lakh minus 2 lakh 40. This will be 1 lakh 60 still due. Next, 2 lakh is the allotment money due, but excess application money received is 2 lakh 40. So I will utilize full 2 lakh. This is allotment due. So how much excess is available? 40,000 excess is available. This will be refunded to the applicants. I hope by this you would be now comfortable to understand this working note. Yes, there is pro rata and there is forfeiture. So first let's record the entries from application. So there is no dates mentioned. First, bank account debit to equity share application account. How much is the total application received? 3,60,000 shares into 3 rupees. So this will be 10,80,000. Being application money received for 3,60,000 shares. Minus 1,20,000 is 2,40,000. 80,000 plus 40 is 1,20,000 shares is what they have allotted. All right. 1,60,000 plus 120 plus 80,000. So 3,60,000. Fine. So this was with respect to application. Now this application money needs to be transferred and pro rata entry to be passed. Equity share application account debit. How much it gets debited with? 10,80,000. Remember, there is a refund. First category, applications for 80,000 shares were rejected. So one is with 80,000. From our working note, we also found out 40,000 will be returned. 40,000 will be refunded. So this to be considered. First, equity share application to equity share capital. will be how much? Number of shares which is issued is 1,20,000 into 3 rupees is the application money. So this will be 3,60,000 to equity share allotment. How much is adjusted towards allotment? See here, 2,40,000 and 2 lakh. So 4,40,000 to bank account. There was 40,000 and 80,000 of the applications were rejected. So that will be 80,000 into 3 plus 40,000. 2,80,000. Now if we total 2,80,000 plus 440 plus 360, it is 10,80,000. So for this, you can write down the narration. B, share application money transferred to share capital adjusted towards allotment and money refunded with respect to 80,000 shares and the excess money received. So this completes equity share application part. Then next is allotment. First, due entry, equity share allotment account debit. 2, equity share capital account. There was a premium here. 2, securities premium account. See how much is totally getting allotted? 1,20,000 into what was the premium amount? 5 rupees. So 6 lakh. This is 1,20,000 into 5. This will be 1,20,000 into 3 rupees. 3,60,000. 1,20,000 into 2. 2,40,000. Is this clear, all of you? Being allotment money made due, including premium of rupees 2 per share. Next is receipt of allotment money, bank account debit to equity share allotment account. Now understand this carefully. How much was due? 6 lakh. Out of this 6 lakh, you have already received amount worth 4,40,000. Yes or no? You have already received amount worth 4,40,000. Here if you observe, there was an outstanding of 1,60,000. 6 lakh minus 4,40,000 is nothing but 1,60,000 is what we have found out there. 1,60,000. Being allotment money received. Is this clear? Yes. Next. All calls, we will just read one point with respect to call. Excess money received with application was adjusted towards allotment and the balance is returned to applicant. We have treated that. All calls were made duly received except the final call by a shareholder belonging to category 1 who has applied for 680 shares. His shares were forfeited. The forfeited were reissued and it was fully paid. So this was next category. First, we will make the final call money due. Equity share final call account debit to equity share capital account. Total number of shares was 1,20,000. Call money was 4 per share. So this will be 1,20,000 into 4. That is 4,80,000. being share final call money made due. Next point. Now we have to receive the call money, but there is a shareholder who is belonging to category 1, applied for 680 shares. He is not paying the final call money. So first we will record for the balance receipt of call money. Bank account debit, calls in arrears account debit, because that is in the nature of receivable, to equity share final call account. How much? 1,20,000 shares into 4, that will be 4,80,000. Now we have to be very careful here. They have given the number of shares applied for, which is 680. So let's do this as a working note. Number of shares allotted. For category 1, number of shares applied is 1,60,000. Number of shares allotted is 80,000. We want how much is the allotment done for 680 shares applied for. So how do we find out? 680, 1,60,000 is for 80,000, means how much for 680? See, for 1,60,000 applicants, they are allotting 80,000. Means for 680, how much? So this will be 680 into 80,000 divided by 1,60,000. This will be 340 shares. So how much is the final call money? Final call money is 4 rupees. 340 into 4. This will be 1,360. 78,640. Being call money received except on 340 shares. Now this shares has been forfeited. The reason of forfeiture was non-payment of call. He was applied, all calls were made duly received except the final call. His shares were forfeited. So we will have to cancel the entry. Equity share capital account debit. 680, sorry, this is number of shares is 340 into 10. 2. There was no, with respect to the premium part, that had happened on allotment. So premium amount is already received. So no impact will be given for premium. 2. Calls in arrears account. 2. Equity share forfeiture account. So how much was debited for calls in arrears? 1,360. So 3,400 minus 1,360 is 2,040. We can also find this out. How much is received except on call? Call money was 4 rupees. So 6 rupees is already received. So that is nothing but 3,040. Being 340 shares forfeited for non-payment of call money. Done? Yes. Next, this is being reissued. Now, this reissue is happening at what price? Reissue is happening at premium. This was reissued at 13 rupees per share. Bank account debit to equity share capital account. Reissue is happening at premium. So, to securities premium account. 340 into 10, 3,400. 340 into 3, 1020. 340 into 12, 4080. What is the reissue price? It is 13 rupees, not 12. Just a second. This is 340 into 10, 340 into 3, 340 into 13. 340 into 3, 1020. 340 into 13 is 4,420. Being 340 shares reissued at premium. Now, if you observe, we have to transfer any balance left in share forfeiture to capital reserve. In this question, we are not at all using the share forfeiture balance because shares were reissued at premium. So, the entire balance which is sitting in share forfeiture will be transferred to capital reserve. So, the last entry will be equity share forfeiture account debit to capital reserve account. How much is that? How much we transferred? 2040. Being balance in share forfeiture transferred to capital reserve. So just looking, is there any point missed? So application allotment, pro rata done, and then forfeiture of shares for non-payment of call. Yes. So this completes our question. As you observed, we have understood a different set of questions. The focus was more given with respect to understanding concepts. If you're strong with your concepts, definitely solving will become easier. Just understand the process and flow of doing those working notes. It works on a simple logic, guys. For every debit, we should just observe whether there is a corresponding credit with respect to the amount. There, you will not miss out on any transactions. So invest lot of time to first get hold of the entries, why it is being debited, why it is being credited, and why it is being done in the particular aspect it has to be. So the solving will relatively become simpler and easier for you. So give more importance to pro rata, that is oversubscription concept, and then forfeiture and reissue, because if the question gets framed, they can completely merge a one entire full-fledged question covering all of these points, like we saw such questions for practice. All of the questions covered definitely is the must to do before you appear for the exams, because each one has its own unique features, comparing varieties from one question to other. Remaining questions you can practice by yourself, understanding the concepts here. I hope whatever we discussed in this video, each point was understood. If you feel anywhere is missed, make yourself revisit that point, get proper clarity, and then proceed further, because this is a very important unit considering the entire company accounts. Minimum 10 marks is assured from this chapter. So understand this properly, guys. So this also becomes the base for your next unit. So therefore, give that time what it is required to understand this perfectly. So until I see you in the next video, keep giving your best effort, guys. All the very best and take care.